Hello everyone and welcome to my morning report chart analysis videos on Wednesday the 3rd of October with me, Richard Perry, market analyst at Hantec Markets. We've got a pretty decent open, in terms of risk appetite. There's been an improvement that we've seen across Italian bond yields, which have pulled lower. And that pull lower in Italian bond yields has certainly helped to calm market sentiment to a degree today, and that has been driven by suggestions in the Italian media overnight that Italy are ready to sort of compromise a little bit, or the government are ready to compromise a little bit with the Eurozone, and actually the budget deficit is going to be 2.4% next year, but then brought down to 2.2 and then 2.0% in the subsequent years, and that has helped to stabilise the market fears to a degree today, with Italian yields coming lower by 10 basis points from yesterday's close there on the 10-year, and certainly that has helped to improve market sentiment for the euro. The euro has gained ground, certainly, with where am I looking? Euro's gained ground across the majors, and it's looking pretty decent. And the important thing, I'll talk about this in the analysis videos in a bit, is that euro dollar has maintained that support at 15, pretty much just above 15 big figure, and that is a key level that euro dollar needs to hold on to. So subsequently we're seeing this sort of general sort of improvement in risk appetite, although the dollar is still fairly positive this morning against the Aussie and the Kiwi, which is interesting, and not against sterling though. What we have seen again on sterling is, again, similar to the euro really. It's sort of an improvement in sentiment overnight. Not a huge driver behind that. Maybe there was just pulled higher on the fact that sterling got hit as the euro did on the Italian yields situation. But certainly you've got the focus today on Theresa May's conference speech for the Conservative Party conference, and how she addresses the Brexit situation will clearly be a focus there. But certainly at the moment we can see that general sentiment surrounding the dollar has just sort of slipped back a touch with that euro move. Still sort of focusing on whether this actually does end up turning into be a head and shoulders top, which could well be seen, but that's for the days and weeks ahead. But certainly it is interesting. Let's sort of talk about the fact that Treasury yields, for example, pretty much bang on where they were just prior to the FOMC meeting. So it is a key driver of the dollar moves at the moment, is that the euro is rallying, so that could well start to drag on the euro on the dollar lower. So what we've got is improvement in risk appetite, which has helped equity markets higher. You've got futures in the States which are pulling higher. FTSE and CAC are both higher today. DAX is closed for a public holiday. Gold is basically flat, consolidating yesterday's gains. Oil is again sort of consolidating as it was yesterday. EIA inventories today will be a key factor there. But generally speaking, in terms of the data front, we've got the UK services PMI, or the PMIs out throughout today, and Eurozone final PMI is basically in line with expectations. Shade lower on the services PMI for the UK, but sterling didn't really react at all. Sort of bigger fish to fry, I think, with the Theresa May speech. And then this afternoon we've got the US ISM data for non-manufacturing, and that's expected to come in at 58. And as I said, the EIA inventory is expecting an inventory build on the crude stocks of 2.1 million barrels. Basically a similar sort of story to last week. Distillates, again, similar story, mild drawdown, and again, gasoline, similar story. Slight build, but that's for this afternoon. So my chart today is Euro Swissy. Now, I think Euro Swissy is an interesting chart because what we've seen is the euro, which has been under pressure across markets in recent sessions. However, against the Swissy, it's held up, and this recovery that I spoke about last week is still playing out. You've got the fact that euro is sort of in this mini uptrend channel, but look at the momentum indicators. That RSI towards 60 now. MACD lines, the stochastics also still fairly strong, but the recovery is sort of regaining a bit of momentum above 1345. This little uptrend channel suggests that little corrections are a chance to buy still. And I think the outlook is sort of pointing towards a retest of 1450, which is that key resistance from August. And if the market can get above that, which is a sort of a degree of a pivot in the old long-term charts throughout 2018, if it can get above 1450, then that really is recovery territory for the euro. So that is something to watch. But certainly the momentum indicators improving is a strong factor there. So with that in mind, I'll wish you good luck in your trading, and I will speak to you later.